Hello and welcome to Cafe Mutual YouTube channel. Friends, we all know that there are a lot of strategies in the equity fund management. So one such strategy is momentum. This strategy has been working very well for the past few years. In fact, alpha and momentum have delivered substantial returns and generated adequate wealth for investors. To talk more about this strategy, today we have invited Sanjay Bembalkar, Head Equities Union Mutual Fund. Sanjay has close to 2 decades of experience in equity research and fund management. He is a CFA charter. So without wasting time, let's invite him. Welcome to the show, Sanjay.
Pleasure is ours. Thank you so much for invite.
Sanjay, so I wanted to start this interview with an interesting question. So of late, you know that equity market have turned quite volatile. So many FIIs are exiting, and there is a lot of geopolitical tension that has been happening, and this has added to volatility. So in such a scenario, what is your outlook on equity markets, and how comfortable are you with the valuations of equity markets currently?
Uh, on the valuation side, we have to look at how is the backdrop of these earnings and how markets have corrected after delivering superior performance of past 2 3 years. If you look at from the index perspective, we have been highlighting that markets had gone ahead of fundamentals. Our union fair value spectrum had gone ahead out of fundamental fair zone and into the modest zone, which was indicating that return expectation should be moderated over a period of time. And after this correction, again, it has come back to fair zone. The
Mhm.
point is that today's starting point at which we are standing after correction of around 10 to 11% from the top in the broader indices, we believe that today is the fair price we are paying for the broader index of Nifty 50. And there is a good correction which has happened in some of the stock levels as well. You are right. This correction was also because of two factors. One, there was a strong outflows from FII side. Almost $14 billion were withdrawn in last 1.5 months by FIIs from the Indian markets. To put it in context, FII position, as per our understanding, is somewhere around $800 billion in India, and out of that, these $14 billion, roughly around 2% of investments have been withdrawn, and that is the context in which this correction has happened. Second area which also impacted and also one of the reasons for correction was that slower uptake in the consumption space. So Q2 FY25 numbers and results were slightly subdued, particularly on the consumption side. There was disappointment that also accentuated this fall and led to correction in the markets. We believe that consumption story is intact. We believe that there was pressure from the government side that spending reduced because of the elections, because of the monsoons. We believe that these are the temporary reasons, and long-term consumption story is still intact. We are at the start of the capex cycle revival, and our balance sheets banking system is in the strong position to support that, and that's why we are optimistic. We believe that this is an opportunity for investors. However, point to be noted that investors have to take some volatility in the near term of 6 months to 1 year period will be volatile because of the new administration coming in the United States. There will be changes potentially in the monetary regime. There will be changes overall from the import export side, and those volatile period would be there. If one has 3 to 5 year perspective, we believe that market is offering a fair risk reward, and risk reward it looks quite good from India perspective, and that's why our outlook is positive on the Indian markets.
Okay. So Sanjay, Union Mutual Fund has will recently launch Union Active Momentum Fund. So what's the rationale for this launch?
Right, right. So momentum as a factor has been working in international market as well as in Indian markets. We were observing that for quite some time. In fact, great academicians like N. Jagdish as well as Titman has done very great groundbreaking work for last 30 years on the factor of momentum. And when we were observing in Indian markets, we observed that 75% of the time, the passive momentum Nifty index that has outperformed broader Nifty 500 index 75% of the time.
Okay.
And that factor is working quite beautifully in Indian markets. And we wanted that factor to be captured for our investors. And that was the rationale why we thought we should be looking at this factor. We did a lot of work R&D on this particular factor, and when we get confidence and when we could identify this is the way we have to capture this momentum index, and that's a momentum factor, and then we are coming out with this product of active momentum.
Okay. So Sanjay, many investors are making good amount of money through plain vanilla product like large and mid cap funds, flexi cap funds, and so on. So what's the utility of a momentum fund in a life of investors, and why should they invest in it?
Sure. So to mention in a plain language, momentum is the price trend, a historical price trend of a stock or of any commodity. That is the momentum. And the strength of that price trend is something, another factor which gets utilized. And that's what people talk about when they're talking about momentum.
Hmm.
And the academics as well as practitioners have been always intrigued by this. A lot of work has been done at the international levels as well. And the work, as well as our experience, our observation indicates that this factor has worked very beautifully in Indian markets as well. And that has provided a significant higher level of returns and value generation for investors when they are looking at it from the long term perspective of at least 5 years. And that is what we wanted to capture. And that's why we thought this fund should be introduced for the benefit of our investors. Any investor, apart from fundamentals, if they want to capture a separate factor like momentum, these are smart beta strategies, and they can look definitely to capture higher uh, return generation potential through such kind of funds.
So Sanjay, momentum has been the flavor of the season of late. It has outperformed all other factors over the last few years. So why do you think that momentum still offers a lot of opportunities to investors?
Sure. So it's a great observation, and indeed, momentum has performed really well in past. However, we believe that this is a long-standing factor in Indian markets as well as global markets. We have observed over and across the cycles, momentum has worked wonderfully when investor looks at it from the long-term perspective. So, though your observation is absolutely correct that momentum has worked well in recent history, but we believe that this factor is there to sustain in Indian markets for long period of time, and over and above, we are looking at stocks. At any given point of time, the universe at which we are looking is thousands of stocks. And from our fund perspective, we are going to choose the stocks where momentum factor is strongest as per our calculations. And those stocks will be chosen. And we believe that such opportunities will be existent in the Indian market at any given point of time. And that's what gave us confidence to launch this product.
Great thought, Sanjay. Sanjay, so passively managed smart beta funds focusing on momentum offer a cost-effective way to invest in momentum fund. Then why do you think that investors should look at actively managed momentum fund?
Sure. It's a great question. On the actively managed versus passively managed, we also looked at different strategies. We also did a lot of work to understand how we can harness this factor best for our investors. And we thought about it. We realized that over and above the passive uh, Excel model or passive formula, we have to put guardrails for investors because one, this is a new factor from
Hmm.
investors' point of view, and secondly, Indian markets is also evolving. Sudden change in the momentum factor, we have to be at the as a guardrail from the unit holders perspective, that if some mishap happens in any stock, if there is a change in value drivers for that stock, and these are sustainable in nature.
Hmm.
Second, on the liquidity side, if there is any change in the market or from the any particular holding which we are having, we should be in position to act quickly. And that's why we chose that active management would be very critical from unit holders perspective, and to value generate from value generation perspective for unit holders.
Hmm.
After, however, point to be noted that in our model, we are going to look at momentum factor solely. There is no other factor, there is no earnings factor, there is no fundamental factor attributes which we will be choosing or which will have any weightage when we are choosing the stocks.
Okay. How many stocks, if you have any idea, I mean, how many stocks would be taken in this to create an investment portfolio?
Sure, sure. So as momentum factor is depicted in multiple stocks, Excel model chooses from the universe of 1,000 stocks. Top 1,000 stock is the universe
Okay.
for this fund. An
mm,
Excel model will choose from the top 1,000 stocks to
mm,
choose from.
mm,
The second layer would be on the momentum factor itself, the strength of the price trend and the strong price trend which is there. Those factors would be taken into consideration to choose which are the best stocks which are depicting the momentum factor,
mm,
and those would be chosen by the Excel model.
mm,
Over and above, the liquidity layer would be there. And
mm,
depending on the market circumstances as well as the liquidity available in those stocks at those points, would tell us how many stocks would be available for investors to for fund manager to buy in the portfolio. We believe that at any given point, this will be a diverse portfolio. I'm not talking in terms of whether large, mid, or small cap, because Excel model and formulas will determine whether the portfolio will be large, heavy, mid cap heavy, or small cap heavy at any given point.
mm,
As well as we are not going to override the sectors which are coming in the portfolio, because wherever the pure momentum factor is strongest, those stocks will be chosen. So again, their sector selection is not the criteria from the fund management point of view,
mm,
and that's why number of stocks will be determined solely by the Excel model
mm.
and depending on the liquidity.
Okay, any backtesting data that you have that you would like to share?
So we have shared backtesting data in our presentations,
Mm,
and backtesting data is quite attractive, provides quite attractive risk reward for the investors.
mm,
However, I would suggest that this is a new factor from
mm,
investors as well as our perspective, and that's why once it is deployed
mm,
and actual results would be there, that would be more of interest.
mm,
I would request that investors who are looking at this fund, they should look at least from 5 year perspective, because
mm,
of the volatile nature of this fund and the
mm,
momentum factor. And also, we urge that investors should try this kind of product in their satellite portfolio, where they should start with small allocation in their portfolios. And once they get more confidence, once they actually understand the risks and volatility, and if it matches their expectations, and then they can increase to allocate in this product.
okay. Sanjay, one last question. Why should MFDs recommend a Union Active Momentum Fund to their clients?
Right. So there are following reasons for which I would suggest that Union Active Momentum Fund should be looked at. One, momentum factor has worked very beautifully in Indian markets. As I mentioned, from March 08, 75% of the times the passive momentum index has beaten the or outperformed the Nifty 500 TRI index.
Mm,
So momentum factor has worked very well. Second, to remove human biases and to capture the pure momentum uh, factor, we have chosen rule-based approach. And we believe that rule-based approach fits best for capturing the momentum factor, because there is no emotional bias, there is no human bias, and there is no forecasting as well is involved in the momentum factor from our perspective. So rule-based investing is something which this product will be using.
mm,
And thirdly, over and above the rule-based investing, there is an active layer which we have designed to guardrail the investors.
mm,
Because on the liquidity, on any holdings, if there is any event which is unforeseen event which happens in that stock, there
mm.
should be active layer. We should be looking at our holdings, and that's why we have chosen active model over and above the rule-based investing. And these are the three critical factors we believe that you would be critical from value generation for the investor. And that's why anybody who is looking at long term, at least 5 years investment horizon, should look at this product.
So, all right, Sanjay, thank you so much for your valuable time and inputs.
Pleasure is mine. Thank you so much for inviting us.
And finally, I thank each one of you for being such a wonderful audience. Have a lovely day at work, guys. Bye.